Hey, everybody. Welcome to the Nasdaq Dorsey Wright podcast. This is Will. I have Miles. It is Thursday, August 29th, coming out Friday the 30th. We have some things to chat about. We're not entirely sure yet. No, I'm kidding. We actually do know.
The first thing to talk about is your shirt. It's pretty festive, Hawaiian. I like it.
I only have a few more days of summer that I can wear this without getting ridiculed. I opened my closet. Actually, I'd be curious your perspective on this. I'm turning into a guy that I want as few decisions as possible. If I had my closet with 12 of the same shirt and 12 of the same pairs of pants, I think I would like it.
Yeah, so I think that I would, but I'm definitely the opposite. So Gabby is listening to this. She's one of the listeners. She listens to the intro.
Uh-huh.
That's it. She doesn't really get through the end of it. But anyways,
Cassie didn't even watch my podcast.
Well, then you got to get on her. Anyways, Gabby would say, well, Miles, you got too much clothes. I got plenty of different options. So, but I'm glad to see the Hawaiian shirt was one of your options.
I mean, Labor Day's this coming weekend. That's kind of the end of summer type thing. So I had to cram it in when I could. And it's still
just get it all out now.
It's still 100 degrees in Richmond too. And I rode my bike in today, so I had to have some breathing. Something to breathe.
Okay.
All right.
Well, on that note, markets this week, they were fine. I mean, just kind of split.
Not hot.
Just split 50-50 in terms of the names we typically look at. You saw a bunch of areas outside of the domestic equity space in the green, crude oil, developed markets, stuff like that. Towards the downside, though, emerging markets, Nasdaq Composite, S&P 500 down about 0.5% for the last 7 days or so. So a lot of those guys, from a more domestic equity standpoint, not that hot.
Yeah, not that hot. Not a ton of change. And it seemed like it was a week where there was going to be a bunch of change. People were really hyping up the NVDA earnings.
Right.
I saw some things yesterday that the market was expecting a 10% type of move after the NVIDIA earnings. After hours, there was some of that
chop.
Yeah, there was some chop. There were some fireworks after hours, but so far today, I mean, the stock's down 4%, which is still a pretty big move, especially given the size of the company. But I don't think that's what most people were expecting.
Yeah, I mean, and here's the thing. Looking back on it, right, you kind of say an implied move of 10 or 11, 12% in either direction, probably a little bit exaggerated. Now, if you go back to previous calls, maybe there's some
looking back, it's it makes sense.
Yeah, looking back.
In the moment, you're like, oh, maybe.
Yeah, maybe, but it seemed a little exaggerated to me. I certainly wouldn't have called it, but it makes sense sitting here today that the volatility wasn't quite what we expected. Yeah. All things considered, the earnings report was pretty good. Just growth was, a little bit slower than projected growth was a little bit slower than I think the street would have liked. So that's where you get some downside action there.
I don't think the technical picture is going to change for NVIDIA much. It's currently 4 attributes. So if you're unfamiliar, we rate every stock 0 to 5. 5 is the best, 0 is the worst. 4 is still viable. So that's a highly rated stock. I moved to a 4 on July 26th. It's still a 4 today. I don't think that 4% move kind of force. I don't think that's going to change anything for NVIDIA here. Still seems like it's in a pretty big area. Looks like it's just consolidating after 150% gain so far this year. I do wonder, and this is crazy, stock's up 150%, but with so much anticipation around earnings and call it a bit of a flop in terms of surprise.
Right.
I wonder if people slowly lose some of the fade, or they start to fade NVIDIA. The AI craze. It's like, all right, yeah, whatever. We got to find some new catalyst to get excited about.
It's possible. I don't have any other really thoughts besides that. I mean, it's possible, but at the same time, where do you go? If you're not you go to utilities as a semiconductor play. I mean, what is it like? Rates are coming down. That's going to be particularly not necessarily a good thing for financials, right? I mean, that's that other area of relative strength. What is it that steps up? We're still pretty risk on right now, so it's not going to be a consumer staples option.
XOU's at 50 bips today.
Really?
Utilities, yeah. Well, I was gonna say about the whole market thing, bad news is a headline, gradual improvement is not.
Right.
And there's, as always, a ton of headlines. Bad news gets all the publicity. And like you said, I didn't actually go through the NVIDIA report. I probably won't, but maybe we get into a bit of that story where it's just gradual improvement. less headline
Yeah,
driven.
is not, gradual improvement doesn't move the stock, right? But the headline does.
It'll give it a shock.
Yeah.
Yeah. All right. What else? Not much to say about NVIDIA. I was looking at the Nasdaq 100. That is going to put in a higher bottom today at 19,300. Pretty constructive move. Back into a positive trend, healthy pullback right at the middle of the trading band. So not overextended. That's right at its 50-day moving average right now. Underlying participation has been moving up. So average stock's been going up along with the broader indexes, which is something that you definitely like to see.
Yeah, and this is a topic not only for NDX, but it's going to be for NVIDIA. It's going to be for the rest of the Magnificent Seven. Like, we've seen August decline dissipate, right? We're back up to within earshot of those all-time highs. Now it's, well, what comes next, right? What is going to be that catalyst around all-time highs that gets us to new
Something
levels?
greater? Yeah.
Or, do you run into those all-time highs again and then fall out of bed, and then things become a little bit more washy in terms of a longer term perspective of identifiable resistance?
Yeah. So, I mean, here's like looking forward. September is historically the worst month for the market. Everybody and their mother knows that.
Right.
Their mother has nothing to do with finance. She probably knows that September is the worst month for stocks. There's the potentially contentious U.S. election that people are maybe concerned about. There's always the Middle East stuff that people are concerned about. So there's plenty of risk out there at the end of the year, and I think you need that to get any type of gain in the market. So we'll see what happens. If you were to guess so far in the month of August, best performing areas, long duration bonds and gold.
Which seem counterintuitive, or is it not counterintuitive? No, that lines up because rates coming down. That would be a tail like gold in. There's less of an opportunity cost. Yeah, okay. I had it flipped for a moment there, but yeah,
it checks out though. But so not only in the month of August, over the past 30 days, gold is up 5%. S&P, for the record, is up 2%. Year to date, gold is outperforming the S&P. Gold is up 21. S&P is up 17. That's just price return. Rolling 1 year return, gold's up 30. Nasdaq Composite is up 28 and S&P is up 26. 3 years.
Rolling 1 year after the year that was 2023 and what's been a pretty constructive 2024. Gold's outperforming.
Gold, yeah.
Big tech.
And it gets worse. 3 year cumulative return. So 3 years ago, August 2021 until now, gold is up 38%. S&P is up 24.
Right.
Pretty incredible.
Yeah.
I mean, rocks kicking the stocks. Now, there's
really
like
doesn't even look that bad. It doesn't even really, like you would say with all of that you just said, you would say, well, it's got to be extended, right? Like gold has to be extended. It's got to be not in a position that you would go and pick this up right here. Doesn't look that bad looking at its technical chart. I mean, it's nice series of higher tops, higher lows, consecutive buy signals.
Yeah.
Things looking not bad. I mean, it's not in a position where you would sit there and say, I can't buy this right here.
Yeah, you definitely haven't seen, just looking at the gold chart. I'm looking at GLD right here. You haven't seen a technical sign of turnaround. Like you said, consecutive buys. It's in a big column of X's right now. The fund score is strong at 4.7. It's a positive score direction. Moderately overextended. If you look at that trading band is pretty tight. So that could change quickly, but pretty tight trading band just above the middle. All that to say, there's no technical signs that we're seeing a breakdown right here for gold. We did have a piece in our report earlier this week that was talking about maybe on a more qualitative or fundamental front, like what would it take for gold to back off of its all-time highs? Because we know gold typically does well in times of stress.
Right.
We know that it does well when rates are coming down. You've seen that when inflation goes up, gold typically does well. And then this chart, Joseph put in our report, it's the year-over-year CPI change. So the consumer price index, then you have gold. Typically they move together. And now we're in this weird divergence where gold has been kicking at all-time highs and then inflation is coming down and down and down over the years, which is an interesting relationship and not something that we've seen before. So maybe inflation picks up a little bit. Maybe gold comes back down. One of those things you would think would change a bit here.
Right, because the story behind that is that when inflation is going up, so is gold. So if inflation is coming down or, kind of slowing down, then gold should technically be falling down as well as things get a little bit less defensive. I guess, I don't know.
Yeah. I think there's a couple of different ways to spin it. We'll see how that plays out. Other comment on commodities while we're on the topic. Earlier this week, I was writing about copper, got back to a buy signal on its trend chart. And you and I have talked about this before. Copper's an important metal to keep an eye on. Like, not a ton of people are actually going out and buying copper, especially advisors or wealth management firms.
Right. But the economy is. Somebody is.
Somebody is.
Right.
And that's important. As you alluded to, it gives you some direction for the economy. If copper is getting destroyed, which it was for a while, it peaked in May and then was down, I mean, to 20% plus over a few months. It's not a great look for the global economy, but back to a buy signal, which is just a technical breakout for us. Not necessarily a start of a new uptrend, but it's good to see.
Oh, yeah, certainly. And then again, going back to the more fundamental aspects of it, outside of just the technicals, it's, upticks there, even if it's nothing more than just a move off of a 20% decline, that's going to be a positive sign for the economy in general as you get more building that's going on, more, investment in infrastructure, stuff like that. So you never know.
Yeah, people definitely. It's this rhetoric every week. It's the whole like soft landing rhetoric. It's like where rates come down, we cheer for a little bit, and then we stop cheering when it's like, oh, we're going to cut now. It's like, okay, whoa, don't cut, and then we want the economy to be good, but not too good. I've said this before. It's like that scene in The Incredibles with Dash running the 100-meter. He's like blowing it away for a while, and then his parents are like, make it close, second,
You got it. Slow down.
Yeah. I feel like that's what the market's getting a little bit right now.
Yeah.
All right, what else do we have to talk about? We kind of hit on commodities, the NVDA, not much of a surprise. There's some other sectors I think keeping an eye on, like real estate is one that.
Right. Yeah, that's your coverage area.
I am biased too because I've been writing about real estate or not writing about real estate for a long time because it hasn't done much.
Take a look at XLRE. Let's pull it up.
Take a look at XLRE. That chart is interesting and not getting a lot of talk right now.
I didn't even look at this.
Yeah, multi-year highs.
Yeah.
I mean, multi-year highs.
Kind of like a triangle looking pattern-ish, maybe. And
yeah.
You got to moving up higher.
Yeah.
Bit extended. That's my
gripe with it. It is a bit extended. I was looking at real estate versus cash. Real estate gave a buy signal versus cash. The last time real estate returned to a buy signal was June of 2020, which has been quite some time, over 4 years ago from now. So we haven't seen this type of participation and movement from real estate in a while. And you may be thinking, it's not just the big guys. Like if you look at equal weight real estate funds, they're doing the same thing. And in fact, they probably look a little bit better than some of the cap weighted funds here.
So is the idea being that rates are coming down, and I don't know the answer to this, so just bear with me as I talk through it. Rates are coming down, but they've already locked tenants and 5-10 years contracts into higher rates. Is that what it is? I
don't know to speak a ton on the fundamentals of real estate, but there's a decent summary. S&P Global wrote this, so I'll quote them. They say, all else being equal, higher interest rates tend to decrease the value of properties and increase the borrowing costs for REITs. In addition, higher interest rates make the relatively high dividend yields generated by REITs less attractive.
Okay.
So when you have risk-free yields coming down, a lot of real estate kicks off a yield. Maybe it drives a bit of demand for fixed income seeking investors and also property values and so forth.
Yeah, that probably makes more sense than what I said, but that's okay.
That makes sense too.
Speaking of more technical stuff though, I don't know if you saw it. XLRE also reversing back up against the equal weighted index as well.
I didn't see that.
Yeah, that was towards the maybe middle of August or so. So we're a little bit late to the party. But yeah.
In plain speak, that means what exactly?
That means that XLRE, so real estate reversed back up against or showing some near-term strength against the S&P 500 equal weighted index.
Yes, the average stock in the S&P.
It's still on a sell signal, so plain speak still has some long-term weakness, but again, getting that reversal back up, showing some near-term strength for the sector.
I don't think a lot of people are looking at real estate. We have two major sector rankings on our system. You have the Dolly sector rankings and you have the asset class group score sector rankings. On the group scores page, you've seen real estate shoot up a lot quicker in the ranks. It's
Right.
actually towards the mid upper half of the rankings now. Dolly still got a lot of work to do. Like it's still in the basement of the Dolly ranks, one above energy now, but still towards the bottom. Still towards the bottom of the Dolly sector rankings. We actually put a piece talking about some of the rankings and their differences. But I think that could be a sector to watch, a sector that people are underweight. We saw this with energy. I'm not saying this will be like energy, but energy in 2022, it's such a small sector
Right.
that if you just own a little bit more than the benchmark, it can do you a lot of good.
Oh, yeah. Well, and that's when momentum, and we're getting a little bit further away from now, and now recency bias is having us forget. But that's when momentum can do really well, right? You have a year like 2023 when the markets do well, and the markets do well because of technology. Well, momentum can't necessarily overweight technology more than it already is,
Yeah.
right? And so, but in a time like 2022, back half of 2022, when energy was really moving higher, momentum is able to overweight that sector much more than the S&P 500 can do. So that's why you can get some outperformance there.
Yeah. Yeah. So I think that's one to keep on your radar for some opportunity. If you have an opportunistic sleeve, maybe taking a shot on some high attribute, high technicals there.
All right. I'll do it.
All right. I know you will. Ask Miles about his investing. You'll get some good stories. All right, man.
Fun.
Well, what else you got? Any parting shots, wise words?
No wise words. It's always a pleasure with you, Will. Good friend, hopping on the podcast, and that's all.
Cool. Well, I'll be on again. Everybody, we appreciate the time. As always, pleasure doing the podcast. We will be on next week.